Monetary Policy Committee policy rate really has been cut to 18%, which is sparking conversation about whether cheaper borrowing could actually breathe new life into our private sector. And that's a question. But would this move make it easier for banks to lend to businesses? Can SMEs finally access financing to grow and create jobs? And is this enough to boost production, investment, and overall economic confidence? Or are there some deeper challenges holding the sector back? And that's exactly what we're talking about this morning. We have with us Ebenezer Otuokle. He's an economic policy analyst, and he's going to share his insights with us on what this rate cut really means for businesses and the economy at large. Eben, good morning. Welcome to the Business Breakfast on Z.
Good morning, and good morning to your listeners, and thank you for having me.
All right. Thank you, too, for making time to join us. So let's get right into it. Monetary policy has been cut. The policy rate has been cut to 18%. How big a deal is this rate cut for our economy?
Okay, so I would say, looking at our trajectory, I would say it is a big deal. It sends a strong signal to an easy start to our credit markets and all that. So we realize that for a country to cut its policy rate by 350 basis points, it's actually a big deal. That is very aggressive. That is quite deep and steep. So you realize that over the years, and sometimes we maintain it for a period of time, sometimes over 5 months. You don't see policy cuts or even an increase, right? So if you see in a single window and you see a cut of 350, that is quite huge, yeah. So I see, and it's a big deal actually. We expect that it reduces pressure on borrowing, right, and also sends a signal to investors that inflation rate is actually cooling down. Yeah. So if you listen to the governor of the Bank of Ghana, he mentioned that this is as a result of what the disinflation that we have experienced over the period, right? So we started the year with an inflation of a little over 23%. We are currently doing it, right? So it is important that this cut count, because otherwise we see that there will be a discrepancy. Normally the inflation rate and policy rate, they should be at par. They should be at a level, right? But if the gap is too much, it creates some distortion, and it then paints a good picture of the economy, right? So that is why it was that deep. Yeah.
But did you expect that that cut? 300.
Okay, so, I expected a cut. I obviously expected a cut because since the last time the rate was cut, we've seen that from it was initially 21.5, right?
Yeah,
so
21.5.
You realize that, 21.5. So you realize that I was expecting a cut, but in fact, even a deeper cut. Some economists have explained that it's possible to get it down to about 16 or 15, right? Because if your inflation is around 8% and your policy rate is around 18, then still there is a big gap, right? So then, in other words, you are saying that I'm borrowing at, let's say, 80%, and inflation is 8, you see there's still a gap. So there's more that can be done. In fact, the governor mentioned that going forward they would have to monitor the market and see if they can even cut further, right? We are hoping that, of course, it's not only policy that determines the lending rate, but it's part of the compost. Yeah.
I see. So, over the past few months or so, we've seen the policy rates cuts. I think we started a year at about 26 or so, and then it came down to somewhere 23, and then 21.5, then now 18. Would you say, from where you sit as an economic policy analyst, would you say that this has actually led to businesses paying less? Because I know that is what the theory says, that once the policy rate is coming down, then it's going to make it easier for people to borrow. Then the borrowing cost will also be cheaper. Have you seen that trend in the past few months?
Okay, so
maybe just to add to that, and do you think that businesses will begin to pay or borrow, pay less to borrow now?
Okay, so obviously comparing the lending rate now cut, right? You can even judge that from the treasury bill rate. That we realize that it came down, right? I think currently is about 10.3 or so, right? Initially, it was higher than that. That is a manifestation that we were seeing a cut, right? But all other things being equal, you realize that the policy rate alone is not the only factor that contributes to lending rates in the market, right? In fact, the reference rate it's a composite of the MPR, which is the policy rate, interbank rate, and then treasury bill rates, right? So it's a weighted average of all these things. So and the banks pick their base rates, which in other words they are able to get their lending rates from. They pick that from the reference rate, right? So we can say that we have the policy rate. Then from the policy rate we can get our reference rate, which is a composite of the MPR. So it's like the MPR is a component of the composite that we use, right? So even if the MPR sees a cut or it reduces, and we don't see other components, right? Also experiencing see, then it will be a challenge, right? So for instance, if the banks are able to see the reference rate, they will take into consideration other issues. Let's say they look at cost of operation, they look at risk factors, right? So all those ones also goes into it. You see, so sometimes we'll see a deep cut in the policy rate, but if the banks think that okay, our cost of operation is still very high, when they still think that maybe default risk is high, non-performing loans is high, then they will be reluctant, right? So even though we see a cut, sometimes it's not as much as we are expecting because the banks will also have to take all these ones into consideration, right? So I believe that at this point we are going to see a cut, and businesses are going to see a reduced rate on their cost of borrowing, right? But like I said, if all other factors are things being equal, we see all these ones also contributing, right, to the reduction in the reference rate and subsequently the lending rate, then we can see a deeper cut in the lending rate, which will give businesses more comfort to operate and give them more money, right, to do business. Yeah.
I see. But so the second part of my question is whether we're going to see that immediately.
Immediately.
Because just before that, so what you just said, are you saying that we haven't quite seen the borrowing costs drop as expected compared to what we are seeing in terms of the policy rate cuts that we've seen this year?
Exactly. So you see that the policy rate cut is like 360 basis points, right? Which like 3.5 percentage points, right? But now when we are going to see let's say a cut in lending rate, it's not going to be as much as that, right? We're going to see something like let's say 1 percentage point or something. That's something that the banks also take into consideration some of these things, right? So how risky is the borrowing? What is the credit worthiness of some of these companies? What is my cost of operation, right? The risk premium. So all those ones will go into it, right? Which will determine. So I'm not expecting the cut to be as deep, right? There's going to be a cut, obviously. There's going to be a reduction in the lending rates for the market, but then we are not going to see something like we saw in the lending rate like 3.5. Yeah.
Okay, right. So so you expect that this? I was asking that. Do you think that this is going to be immediate? The effect of this particular rate cut? Is it going to be immediate?
It's going to be immediate. I mean, I'm sure in the next pricing we do for the banks, right? In their next pricing we do, they would have to take this into consideration. So probably somewhere next month, early next year, we will see the effect in the market, right? So it is important that the Bank of Ghana, as a regulator, is also able to monitor some of these things, monitor the base rates, monitor the reference rates for the banks, and then see that they are not taking advantage of the market, right? Because if you see, I mean, theoretically, we see that the policy rate is the rate at which the central bank, the commercial banks borrow from the central bank, right? So if you are going by that theoretical definition, then if you see a cut in the policy rate, then you should also be able to reduce your lending rate. Yeah.
I see. Now historically, how has Ghana's private sector actually responded to previous policy rate cuts? Are there lessons that we can pick from the past?
Yeah. So historically, I mean, of course, like I said, we've seen that whenever there are cuts, there are, I mean, some cuts in policy, there are some minimal reductions, right, in the lending rate, and often the companies want to take advantage of it. They would want to take advantage of that because, especially for the capital intensive ones, like companies that are very capital intensive, and sometimes they borrowed money. They would want to borrow to refinance because sometimes they're going to borrow at a higher rate. They would want to, okay, then let me go to another bank, borrow at a lower rate, and then pay off, right? That strategy and all that. So most often they would want to take advantage of that. They would want to do that, right? So it is important that we keep on looking at the metrics, looking at the measures. That what do we do to give some relief to these companies? Because whenever there's a cut, at least no matter how small it is, it gives them some breathing space and some space to get extra money for other things, right? So instead of maybe using all the money in paying interest and all that, I mean, they get space to, I mean, expand and also employ more people. So that is the theory, and even that is the practice, that when there's a cut, we see some relief for the companies.
All right. But you actually said you expect that it will trickle down very soon. We'll see the drop there. But how likely is it that commercial banks will pass on the benefits of the lower policy rates, like you said, maybe next month or early next year, to SMEs versus large corporations? How likely is it that they will pass it to? They'll pass the benefit to any of these? Is it SME? I mean, how is it going to be for SMEs and large corporations?
Yeah. So you realize that usually even if they would, like I said earlier, maybe they would cut, but they do that slowly and partially, right? Most often they are also looking at like other factors, like you said, which is why the regulations should be tight on them. Because I mean, if you allow the ordinary capitalist, the business person, who would want to make more profit, right? So it is important that we monitor them. We look at their base rates. We look at what they are doing. So I would say they would have to do that. But then usually slowly and partially they would have to do that at a point. And usually because they are also afraid that, okay, what is the car? You see, because also in Ghana we don't have a good database to be able to measure the credit worthiness of some maybe companies or even individuals. Then it becomes a challenge. So you see that most often when these things happen, those who benefit or maybe are able to benefit even a little is the large corporations, because for them they have history, right, with these banks. So they are able to I mean, take lessons from that to make their decision. But when it comes to startups, they will struggle. Startups and individuals who want small credit for, I mean, and in fact, SMEs and all that, they will struggle a bit because the banks are reluctant. I mean, they want to, and the good thing is that the government this year in particular has not been aggressive in the domestic market as it has been over the years. But in the last budget, we heard the finance minister say that they wouldn't rush to go into the capital market, to the external market, but then they will still be relying on the domestic market. So even though they are cut, if the government is heavily engaged or heavily involved in the domestic market, then that also hurts the private sector due to the current out effect that would come as a result of that. Yeah.
So I want to know. So essentially, what I'm trying to get is whether small businesses can expect easier access to financing. From next year, like you said.
Oh yes. So obviously they'll begin seeing better. I mean, of course, better than we are seeing now. And for easier source of financing, that is why some of the government interventions are also very important. And the banks will also have to look at some of the packages that they give. Of course, it's important that we are able to give easy credit and accessible and probably easy for as I said, the SMEs to understand, right? So this, I would say, this is a good starting point, and this measure is something that will give the private sector, SMEs, small businesses, the opportunity to also experience some cheap credit, right?
Right. Actually, 29 minutes after 9. This is Business Breakfast on Z101.9 FM with me, Trevi Hammond. And this morning, we're talking about the monetary policy rate cut that has been, that is now at 18% from 21.5% a few months ago. And we're trying to see whether that will actually translate to some expansion of jobs and all of that in the private sector. And my guest is economic policy analyst Ebenezer Otu Oakley, and he's sharing his thoughts with us this morning. You can join a conversation on 0544321019, 0544321019. We're streaming live also on Facebook at ZFMGH and on YouTube at Z Multimedia. Please do well to drop a comment on our platforms, and we'll read them for you. Okay. So, Eben, let's continue the conversation. I want to know, so which industries do you think will benefit most from cheaper loans?
Yeah, so, like I mentioned earlier, normally when there are such cuts, the bigger corporations, the ones that are very capital intensive, benefit a lot, right? Yeah, because, so I would mention probably the manufacturing sector, construction, agro-processing, trade and logistics. Those ones are going to benefit.
Why though?
Yeah, and then the reason is that they are quite capital intensive, and they are always in the market looking for money to invest, sometimes to pre-finance some of their projects. For instance, for many constructors who are doing roofs and all that, usually they have to get access to finance, construct the roof before they get the government to pay the certificate and all that. So this will be a cheaper credit for them. It will give them cheaper credit. And because they're also going on a larger scale, you see, effectively they benefit more compared to compared to the smaller SMEs and all that. Yeah. And for the smaller SMEs and all those ones too, they struggle to even get financing because sometimes the banks are reluctant because they don't have any issue with them. They don't know their credit working, but for the large corporations, they benefit a lot. So no matter how small it is, this manufacturing, construction, agro-processing, trading, logistics, those ones, they benefit a lot. Yeah. And even if there is a cut of about 1%, just look at the 1% of borrowing, like 1 million Ghana cedis. Look at the that would be. You understand? So in as much as it's going to be there's going to be a benefit cross-board, large corporations benefit because of the scale of their credit, the credit on their balance sheet.
Okay, but are there certain risks? I think you tried to mention some earlier, but are there risks that banks might not lend more even with a reduced policy rate? What factors could actually limit their lending growth?
Yeah, so I think I mentioned the risk premium, right? So as a bank, I want to look at what is the default rate, what's the loan default rate in the market. How likely is it for people to pay loans right now? So you see, in some countries where the banks are sure that we know the data base of our customers, we can track them, we know what to do, we have access to collateral and all those requirements, then they are sure that you can pay, right? So that one it gives you a reduced credit cost, right? But in Ghana, where those ones are not, those things are not available, sometimes it becomes difficult. So that is one of it. The other one would be the cost of operation, right? So the banks will also consider all these ones before they would have to make a decision on that. So, like I said, it's a composite. When they are looking at their reference rate, they look at the composite of all those things. Sometimes they will even look at the required reserve rate, right? Okay, so what reserve do I have to keep? If I have to keep more reserve, then I can give cheaper credit. But if I have to keep less, then I have to be strategic and be able to do some rationing. So in doing the rationing, then I would have to look at it carefully, and then that can also make credit costly. So they will have to look at the risk, like I mentioned, their cost of operation. They have to look at the risk premium. They would have to consider the required reserve, right, and all those ones. So I mean, actually, a lot to go into it, but the MPR or the policy rate is a big factor in determining the lending rate in the market. So of course the risks are there. The risks are there. But if the regulator can at least give the banks some assurance that okay, these are things that we can look at, we can begin to re-strategize our financial system, begin to have data on some of these things, it will help a lot, right? See, if you go to some of these advanced countries, they have access to cheaper credit because of how the banks are able to have access to data on their customers, on depositors, on creditors and all those ones, right? So it's something that we should begin looking at going forward, and then that would help a lot.
I see. Because I'm asking all of this because we've seen policy rates cut in the past. I think 2017. I was sharing a while ago that 2017 to 2019, we see a major policy rate cut. I mean, we saw quite a number, but it didn't quite trickle down into what we expect. We saw SMEs still struggling. Yeah. We saw some noticeable gains with large corporations, but it didn't quite. But it was quite slow, and also there were other things that were also happening around that time. That is why I'm asking all of these. Yeah. That are we going to see different things this time around? What conditions will make us see the changes real quick? Maybe that will be my question to you now. That what conditions are we going to see to actually tell us, or are we seeing that will actually tell us that indeed this policy rate cut will trickle down to the borrowing cost, the reduction in the borrowing cost?
Okay, so first of all, it's important that we stick to the plan, we stick to the fiscal discipline, we stick to the expenditure consolidation. What we have done to get us here, to get us to even reduce inflation. See, what informed the governor first of all is the fact that is the level of inflation we have now, which falls that okay, then we have to reduce policy. You see, because if you're also not very careful and you keep reducing policy rate to some extent, there's a trade-off between the policy rate and inflation. It can also trigger inflation in the market, right? So first of all, I would say that we need to stick to the plan. We need to be disciplined so that we can keep inflation in check. Because of course in Ghana we practice inflation targeting, right? Now, the other thing is that the Bank of Ghana has to reinforce its regulatory measures. It has to keep an eye on the banks, because sometimes because they also want more profit, they are reluctant to this. But like I said, even if they do it slowly and partially, they will do that. But we have to keep an eye on them, right? Thirdly, we need to educate our people on why it's important for them to stick to the terms of loans and the credit they take. You see, because if banks begin to see that okay, people are able to pay off their loans faster and all that, you realize that they would also see okay the risk, the premium, they will give us some premium, right? And that would also help a lot. See, because they will take that into consideration. Now, also the banks also face some challenges when it comes to maybe their operations, right? So what can we do to give them some space, right? When we begin to see the economy growing generally, you see, that's one thing about economics. I mean, something happens at one point and it triggers almost every sector, right? So if we begin to see the economy expanding, we begin to see lower utility rates, we begin to see all those things happen. Then it can also trigger the cost of operation, which will also help the banks, right? So because as a business, the bank is looking at all these factors, right? So we have to start looking at the broader picture, right? So it's not just about the policy, it's about other things now we have to take it into consideration. Otherwise, even if the policy rate reduces, we will not see much, right? And so So we have to start looking at all these things. What do we do from the beginning? We have to look at the foundation, so that we can begin to see some real benefits, right? And also lastly, it is important that we begin to also look at how we can give credit to this this in the informal sector, right? What do we do? What education can we give them? Do we have to sometimes set up at the markets and all this so that you can get access to them? Because sometimes they borrow from the tabletop. People tell you that okay, I can give you loans and all that, and then they actually exploit them a lot. They will tell you that maybe every week come and pay 50 CDs or something, and you keep paying for a long period of time. Some our mothers don't think it's expensive. You don't think, oh, at least I can pay these 50 CDs every week. It's nothing. But if you look at the duration of this payment, the person is getting sometimes over 100%. Profit on the amount of money that they're giving them. So you see, we have to look at some of these things as well. Yeah.
Right. Okay. Now let's look at the effects on customers. Will the lower rates actually push prices up or down for consumers? Really?
Okay. So in the short term, the lower rate is supposed to stabilize prices, right? So usually we use the policy rate as an inflation targeting to stabilize the prices, right? So when now the policy rate has dropped, we expect that the companies, the businesses who have cheaper access to credit. Now, when they have cheaper access to credit, then it means that their cost of production, right, or their net profit would increase, right? So they should be able to translate that benefit into the prices of their goods, right? They should be able to translate that. If you are having lower credit, then you should be able to give sell at a cheaper prices in the market. What you are selling. So consider the agro processing. I said that they have even more benefits compared to smaller or informal in the informal sector. So if you are in agro processing, let's say you are producing some orange juice, some food products and all those ones, and you have cheaper credit, then you should be able to reduce your prices, right? So in the short term, that would happen. In the short term, price will stabilize, right? But in the long term also, we have to be careful because that is why in the long term, when prices stabilize and they keep stabilizing, at a point, it can also generate inflation, or it can also lead to inflation, okay? Because that means that money will go, because people have cheaper access to credit, they will borrow more at a cheaper rate, then they will have access to more money. If they begin to get access to more money, then you see more money chasing towards goods, right? We always say in economics, that can also bring a chance. So in the short term, prices are supposed to stabilize.
Not necessarily come down.
Exactly. So not necessarily come down, but they're supposed to stabilize. Not at the rate at which we will see them increasing and all that. In fact, some businesses even have to cut prices. Okay, it happens. Recently we have seen many of the the electronic companies like iPhone, those ones, they begin to do some of these things. So in the short term, prices will stabilize, and that would be good for all of us.
Right. Now, in terms of job creation, do you foresee this especially for small and medium-sized enterprises, could cheaper borrowing actually translate into tangible benefits? For instance, expansion and job creation.
Oh yeah, so I'll say it can happen both directly and indirectly, right? So let me directly. If I am unemployed, right, I can walk to a bank when they have reserves to give, right? I can walk to a bank. I can tell them that okay, I want access to credit to start a business. If I'm able to present a very convincing proposal, that okay, this is what I'm going to do, this is what I'm doing, this is what I'm planning, this is what I'm expecting in the future, they can give me credit, right?
Yeah.
So they should be able to do that. Now that would create employment, and that would help me to give myself job and even subsequently create jobs for other people, right? Now, indirectly, existing companies will also have access to cheaper loans, like we have said. I mean, no matter how small it will be, it's still cheaper than the previous, right?
Yeah.
So they will get access to cheaper loans, and that means that they can expand, right? Because if I have cheaper credit, instead of using the extra money that I would have used to pay for credit, to pay for the interest rate, I can use that money to expand.
Yeah.
Exactly. So if I expand, then I have more space to hire more people. I can expand to other places, maybe from Accra to Aflao, different places, and then I can expand. Then when I expand, I'm creating jobs, right? People's income will grow. They will pay taxes. I mean, it's a cycle. It keeps going on. Yeah. So I believe that this can create jobs. So I mean, and this can happen if the firms can be confident enough and go for credit. Yeah.
But do you think that such a rate cut could encourage new investment or entrepreneurship in Ghana generally, or are there some other constraints, maybe operational costs, like you mentioned a while ago, and maybe market demand still too high?
Yeah. Okay, so you realize that our financial system is not good enough, right? So sometimes it's even difficult, or should I say, people they are even afraid to go for credit. Sometimes it's very cumbersome to even get credit. You have to fill a number of forms. You have to get collateral. You have to get guarantees. Sometimes it can be stressful, right? So these are things that we should begin looking at. What can we do? What can we do to bring credit to the doorstep of people?
Right.
Banks have started doing that, because they can't keep people's deposits in there and they're not giving out loans. Because if you don't give out loans, how do you get money to pay off the interest rate on deposits that people have got right now? So it's important that they look at that. So we have to be able to explain to people, make it easier for people to get access to credit. Sometimes banks should be able to maybe go to people's shops, explain to them the packages that they have, and then give them flexible terms of payments, right? You wouldn't have to come to a bank to come and make payment. There should be an easy way, electronic way of doing some of these things, right? So those are some of the challenges that we have. The fact that sometimes people don't even know about it. Information is very important. People don't even know about some of the packages that are available. Sometimes people also think it's too complex to go about it. It's cumbersome to get credit. You have to fill a lot of forms. You have to get this, get guarantee, the documentations and all that. So we have to begin making it a bit simpler, right? What can we do to make it more innovative and simpler for people to get credit? Yeah.
Right. Okay. Because of our time, let's try and look at it. Let's look at the broader economic implications. I want to know, in what ways could this rate cut influence production, employment, and overall economic confidence?
Okay, so for economic confidence, we see that the Bank of Ghana, the governor expressed believe that there is some confidence in the market, right? Which is why they think that it's important to cut, and believing that it's something that they can even do further. Now we are expecting that this rate translates into cheaper credit. We are expecting that would happen. We are expecting that business should be able to expand. We are expecting that there should be enough education for businesses. We are expecting that from the business side as well, they should be able to give the bank some assurance, reasonable assurance, that they won't default on payment, right? So it's something that we must all begin looking at holistically. What can we do? Of course, business will begin to expand, I believe, right? But then it's important that what you are saying, you're able to stabilize it. Otherwise, if in the next window, which is in January, we see that the the committee sit down and they decide to now raise it again, then we it's like it becomes a challenge. We don't see the progress, right? So we believe that we keep to the discipline, keep going at the same pace, and then we will see improvements coming. So, of course, like you said, like we say, businesses will start expanding, and then keep smaller companies also begin to have access to credit, and that will be good for the economy, because when that happens, we see the economy running, so that it cools down the overheating. Yeah.
I see, right. So looking forward, what indicators should we watch to see whether the private sector is truly responding to this rate cut?
Come again, please.
Yes, I want to know what indicators we should be watching to see whether the private sector is truly responding to this rate cut.
Okay, so I mean, first of all, we for the private sector, we will look at if they are expanding, right? We see, are they expanding? That is one. We see that are they able to offer some jobs? Are there some price cuts, right? Now that to give us the real benefit of whether the price cut is actually reflecting for these smaller companies, right? Are they able to get access to cheaper credit, right? We can look at what are the default rates in the market. We can look at what are the, how do you call it? Because if you have access to credit and you are still defaulting, it means that the credit is too expensive for you to some extent.
Yeah.
Because that may make you default on paying, right? So I believe these are some of the things that we can look at. So realistically, we want to see that the banks have cheaper credit. They are able to expand. They are, of course, like I said, if they expand, they can.
I mean the businesses.
Sorry, the business. Sorry. So these are some of the things that we can look at.
But one thing about, I want to know, could banks or maybe financial stability be negatively affected in any way?
Could banks be negatively affected?
Yes, in any way.
Well, of course. I mean, in such a situation, if the regulator becomes too strict, right, and maybe ask them to cut so much, then they can also be at risk because, like I said, they have to look at other factors.
Yeah.
To them. So if they cut too much, then banks will also begin to struggle. But I mean, in Ghana's history, we've seen that banks have been doing well sometimes. During COVID, banks were still doing well. Banks were one of the sectors that were doing well, even during COVID. That means that, I mean, they should be able to transfer some of the benefits to us, right? So I would say there is some risk, but that's not likely. That's not likely. So they should be able to transmit some of the benefits that they get, some of their profit, to the private sector to also benefit. Because I don't think they are going to cut that much. But I think they should be able to do something. Yeah.
Right. But usually in such cases, does the government or Bank of Ghana have to do anything to make the rates cut? The rates cut work?
Oh yeah. So I mean, that one is in the bosom of the Bank of Ghana, right?
Okay.
They are the direct regulators. So it's about sitting down with the Ghana Association of Bankers, right? And then look at how well they can go about it. I mean, negotiate. What can we do? What are the factors we can look at? We have to look at compromises that we can do. So it's important that, of course, if you leave the private business person to operate without any eye on them, then of course they would want to make the maximum profit they can. So that's why it's important that the Bank of Ghana
monitors everything.
What monitors them, right? One thing I've seen is that currently it looks like there is some good coordination between the central bank and the banks, because I see the head of the Ghana Association of Bankers usually touting the efforts of the government. I believe that a sign of a good relationship, which is good because if there's a good relationship, then they can always come to a compromise,
Right.
and look at how best that can benefit the ordinary Ghanaian.
Okay. Right. Okay. Eben, just before we go, overall, do you believe this monetary easing is a game changer for Ghana's private sector, or maybe more of a symbolic move overall?
Oh no, I don't think it's just symbolic. I think it's a game changer. We are beginning to see progress, right? We can start small, but it even get better. In fact, I was very very happy when the governor said, as I keep saying it, that it is possible to even get a lower policy rate. You see, I mean, if you compare us to our neighbors, some are doing lower, some are doing like 16, 15, 14 and all that. So you can do better. There's still more room for improvement. This shouldn't be just symbolic. We want to see real impact, right? We want to go beyond the numbers and look at the real benefit. Okay, so that is what I would say about that.
Right. Any final words before we go?
Yeah. So I mean, like I said, the private sector should be able to benefit from this. We should be able to explain the benefits of some of these things to the private sector, especially the informal sector. They should be able to have access to cheaper credit. The bank should look at how they can welcome them to the bank. Okay, make it easier for them. Make it easier for them to get access to credit. I mean, they should look at how they can even send some of their staff to the market. They should lessen the collateral requisitions and all those ones. I mean, what can we do? Because these things are efforts that can go a long way to benefit the country in totality. So, finally, that's what I'll say. I'll say that the Ministry of Finance, should not take its leg off the path, right? They should keep going. They should keep being disciplined. We should keep to the target, keep to the budget requirement, and I believe that in the long run, we will start seeing real benefits. Yeah.
Right, Eben, thank you so much for your time, and thanks for sharing your insights with us this morning. Really grateful.
Thank you very much for having me. Yeah.
All right, please do enjoy the rest of your day. I'm sure we'll speak again soon.
Yes, sir.
All right, thank you. Right, okay, so that was Ebenezer Otu Okle. He is an economic policy analyst, and he joined me this morning for a roundtable discussion, and we've spoken quite extensively about the monetary policy committee having cut their policy rates to 18%. And so, I mean, essentially what Eben is saying, that we're going to see the effect, but it's not going to be very soon. It's not going to be immediate. We'll see it maybe hopefully next year. We're going to see the impact. And he says that the impact it cuts across several things. When it comes to expansion, once the business are able to get the loans, be able to get the funding, they are able to also expand and also maybe create more jobs and all of that. So we will see some things like that. But for now, what we will be seeing the most is stability. Stability is what we'll be seeing. Yes. But like I said during my business brief earlier, we've seen certain rate cuts, and that never trickled down into the borrowing costs, cheaper borrowing costs. And so that is why we had this conversation this morning. If you missed any part of it, you can visit our social media platforms on Facebook and on YouTube. The video will be posted there. On YouTube at Z Multimedia, and on Facebook at ZFMGH, and then you can play it back. All right. So that will be all for today. This is how we wrap up on the Business Breakfast on Z 101.9 FM, your lifestyle, leisure, and business platform. It's been a great show, and I hope you got some value from today. We'll be back again tomorrow for other very important and very interesting conversations, and we will make sure that we always serve you well. So please keep listening to Z 101.9 FM. Up next is The Brighter Side with Jeremy Okorie Amwako.